Thailand exchange rate. Introduction. Thailand is located in the center of the country. Thailand's diverse ecosystem include the hilly forested. The fertile rice fills the middle plains. The rough beach of the small southern peninsula. And lastly, the vast plateau of the northeast, all of which are entirely inside the tropics. Thailand was predominantly an agricultural country until the second part of the 20th century, but since 1960, the growing numbers of people have moved to the Bangkok, the capital, and the other cities. Thailand's administration. Thailand has 20 constitutions. Thailand government is divided to 3 branches: the executive, legislative, and judicial. Legislative branch: Parliament, Senate, and House of Representatives. The government system is based on the Westminster system. Bangkok, Thailand's capital, contains all the country's government branches. Major economy: manufacturing. The industrial sector, which includes manufacturing, mining, and others, in Thailand was heavily intertwined with agriculture in the early years. With changes in industrial policy, industries such as petrochemicals have gradually recovered. 2 is agriculture. Agricultural development has played a significant role in Thailand's economic transformation. 3 is services. Transportation and others have all been significant contributors to GDP and job creation. The latest Thailand exchange rate. The Thai baht has soared against US dollar in 2021. Thailand currency has jumped more than 5% against the dollar. On year-over-year, it has bounded even higher, nearly 8%.
Thailand's competitiveness has suffered as a result of currency which harm both goods, exports, and tourism. Professor Paul, Asia economist, said the strong currency is worsening the Thai economy's plight by hurting exports further. A stronger currency makes the country's export more expensive, causing them to be less attractive in international market. Factors that affect changes in Thai baht and US dollar exchange rate: interest rate differential, manufacturing production index, and terms of trade. In the short term, a 10% appreciation of the baht will lead to a decline in GDP 0.4%, a drop in domestic investment of 0.8%. Many consider that baht a safe haven currency among other emerging market currencies due to its stability. As a result, the baht is likely to retain or increase in value, attracting speculative capital inflows and placing upward pressure on the currency.
Current status of unemployment rate in Thailand. People who are employed or jobless, that is, those who do not have a job but are actively looking for one, make up the labor force. The unemployment rate in Thailand and other nations is calculated as the percentage of the labor force that is unemployed. The unemployment rate seldom declines below 4 to 5% even during boom times. When the economy goes into recession, then unemployment can reach much higher numbers. Thailand unemployment rate increased slightly from the previous year to 0.8% in 2020. The majority of Thailand population is employed and in working age. The inflation rate in Thailand. The annual inflation rate in Thailand decreased to 1.25% in June 2021, down from 2.44% a month earlier and below market expectation of 1.14%. At the same time, housing costs declined 3.11% in June, quicker than 0.91% reduction in May, dragged down by the cost of energy, gasoline, and water. Reduced power and water bills, as well as lower prices for white and glutinous rice, chicken, eggs, and fresh vegetables all helped to limit the rate of inflation. On a monthly basis, the CPI dropped by 0.93% from April. In May, the core CPI, which includes raw food and energy price, gained 0.49% year-over-year, but declined 0.11% month-over-month. Average headline inflation was 0.83% year-over-year in the first 5 months of this year, while core inflation was 0.23%. Mr. Richanu Niwatjinda, Deputy Director General of Trade Policy and Strategy Office, say CPI will climb again in June, although at a slower pace due to state subsidies.
Capital regulations, at least in the short to medium term, are effective in taming offshore money inflows that cause rapid appreciation of the baht. Data showed the country's manufacturing output for June headed the same way. It fell 5.54% from year earlier, which worse than the forecast of a 3.15% decline. Considering these weak trade trends, together with challenging outlook for regional growth, a strong currency comes at an inopportune times. Capital regulation, on the other hand, have long-term negative effects for the country's credibility and financial markets. To stop a prior round of a significant baht appreciation, the BOT introduced capital inflows controls in 2006. The stock market crashed and bond yields soared, prompting the central bank to ease some of its restrictions within a day. As a result, capital restraints are improbable due to their long-term consequences. The strong baht could simply be a result of global dynamics that are reducing exports, such as slowing global GDP and trade tensions. Even if it increases household debt, many people still hope for another rate cut this year. In the midst of this argument, the central bank's ultimate goal is to maintain stability. Under non-pegged systems, exchange rate fluctuations are avoidable. A decrease in the discount rate is accompanied by a decrease in other interest rates, resulting in greater borrowing and investment by private business. To begin with, open market operations such as those conducted by the central bank may purchase short-term bonds, government securities, and treasury bills from both people and businesses' purchasing power.
Conclusion. The influence of Thailand exchange currency versus the country's most important trade partner. The movement of selected exchange rate also follow the increase in the interest rate caused the home currency to appreciate, while the decreased interest rate caused the home currency depreciate. The Bank of Thailand actively manage the policy interest rate, a sensitive factor that can affect any currency rate. To summarize, any exchange rate will influence the movement of the policy interest rate in the same way. Finally, the exchange rate will be influenced by a number of factors. Even while the balance of payment and foreign direct investment appear to be related to the exchange rate, the research revealed that there is no link between those two parameters that exchange currency chosen. That's all. Thank you.